Hello and welcome. You're tuned in to Buy and Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar. This is the show where we get all your stock-specific queries answered in this show. For that, you can keep sending in your questions. The number is flashing on your screens. Send us your stock-specific question, the buying price of the stock, the holding period, your question, and we'll get all of them answered by our expert. And now, on our expert panel, we are joined by Lancelot Dicuna, who's the Chief Investment Officer of ValueX Wealth Connect LLP. Thank you, Lancelot. Thank you so much for joining us today. Good morning to you. Let's begin with the first question that's coming in then. The first question is coming from Padmaseva Rao from Bangalore. He says he wants to buy Delta Corp at current price for the next 3 years. Please advise. Lancelot, there's a lot of news flow coming in on Delta Corp and the gaming companies where there is a ban on real games and so on. How does Delta Corp then look to you? I mean, it has seen considerable downtick after that news came out. But for a long-term hold, would it be an advisable stock?
So, I think Delta Corp is basically managing casinos and hotels around casinos. And given this whole, mood that it is better to restrict gambling and online gambling, it may also spin off to the physical gambling that is being managed by Delta Corp in the locations that they have, and that could impact their business significantly. So while at a particular period of time, it was felt that, in order to attract tourists, especially high value tourists, if you offer gambling as a destination in the destination, it does add to the value. But I think now the impact of or the negatives of the gambling is seen to far outweigh the benefits that the economy derives from such activities, and that could be negative for Delta Corp. So while the price has corrected significantly, I think it's better to stay away from these sectors because any negative regulatory impact can be significant on the business. And like we saw in the case of the online gaming companies, business changes overnight, and from a high growth business, it could end up into a loss-making business.
It could enter into a loss-making business. That's the view on Delta Corp. But we are now also joined by Osho Krishnan, who's the Chief Manager, Technical and Derivative Research at Angel One. Hi, Osho. Very good morning. Let's get back to all the queries then. This one is coming from Siddharth Pandey, who's writing from Lucknow. He says he's a beginner in stock trading market. He's purchased 10 shares of HDFC Bank at a price of 970 rupees. These are split shares. He wants to know whether it's the right time to add more at the current levels, and also how long should he continue to hold these shares. Osho, you want to take this one?
Very good morning to all of you. Well, yes, no doubt the HDFC Bank technically and fundamentally both are looking very positive at even current levels. But as of now, the counter has seen some kind of correction after the bonus issue and now is hovering around 100 exponential moving average, which even coincides with the previous consolidation zone. So 950 to 940 is expected to provide very strong cushion to the counter, and I expect that in the coming period there is a high possibility for the counter to bounce from the zone of approximately 950, 940 kind of a zone. But as of now, the counter is into a very strong consolidation phase. On the lower end, 940 is a very strong support. On the higher end, 980 to 1000 is the resistance level. So wait for a breakthrough from these levels, then only we can see some kind of continued momentum in the counter. But no doubt from a longer term perspective, one should stay intact with their investment and even can add more positions around the zone of 940.
All right, so that's the view coming in on HDFC Bank. Let's move on and stay within the financial package only. This is R. Ganesh, who's writing in from Bangalore. He says he would want to invest for the long term, 3 to 5 years, in NBFC stocks, Bajaj Finance, Shriram Finance, Chola Investment and L&T Finance. Lancelot, how does this pack look to you? We've just had a note also, but today by UBS on financials where they are giving Chola and as one of the top picks. In fact, they're saying that they expect financial sector profit pool to nearly double in the next 5 years. So they are bullish on the financial pack and the names that I just mentioned. What about you?
So I'm also bullish on the financial pack because the environment for financials has improved. We have seen a lot of liquidity come into the system being provided by RBI. Also, you have seen that interest rates have come off, so that would aid the NBFCs in being able to lower their rates as well, because their borrowing costs would go down. Second is, you have seen an environment where NPAs haven't grown for these companies in line with deteriorating conditions. So even in difficult market conditions, these companies have done well. So given that background, I think my top two picks in this sector would be Cholamandalam Investment and Finance and Bajaj Finance, because Bajaj Finance is a little different from the regular NBFCs. It has moved and converted itself more to a platform play. And going forward, you will see the economies of scale, in terms of the online penetration for loans build up, and that could give them significant operating leverage. As far as Cholamandalam is one of the well-run, finance companies and has very strong balance sheet, and in these type of, as well as a well-diversified portfolio. So it is a lot less risky when compared to some of the other NBFCs. So I would stick with these two as good options for the next 3 to 5 years.
Bajaj Finance and Cholamandalam Investment are two good options. But up next is an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360.
Welcome to Maharashtra 360, our exclusive roundup of what's driving change in India's biggest state economy. From transformative infrastructure to bold technology initiatives, from investment and industry to welfare and community impact, here's what's making news and why it matters. Chhatrapati Sambhaji Nagar is being rapidly repositioned and developed as Maharashtra's emerging electric vehicle manufacturing hub. This will be supported by large-scale industrial infrastructure and a forward-thinking EV ecosystem. In April, the state government announced an acquisition of 8,000 acres of land in this regard. Chief Minister Devyani International stressed on the necessity of an assured water supply to the city. The city's water woes are being addressed through a 2,740 crore rupees water supply project, crucial for supporting its industrial ambitions. The CM requested officials to leave no stone unturned to ensure its full commissioning by December this year. Artificial intelligence is at the heart of Maharashtra's next leap. CM Fadnavis inaugurated the Symbiosis Artificial Intelligence Institute in Pune, offering India's first BBA and BSc degree programs in AI, with 190 students already enrolled. Now, a multilingual AI assistant, Sai, has also been unveiled. In fact, the government is also working with Google for traffic planning and Microsoft for AI centers in Mumbai, Pune, and Nagpur, with initiatives for agriculture, healthcare, and governance.
It is right time that we embrace AI, we start creating human resource in AI, and we start dominating the AI revolution.
In a parallel push on the occasion of the 25th anniversary of Maharashtra Knowledge Corporation Limited, the CM called on them to prepare citizens to embrace AI-driven change. The state assured backing MKCL's development programs. Deputy CM Ajit Pawar joined Chief Minister Fadnavis at the event.
आज महाराष्ट्र हा आपल्या देशाचं डेटा सेंटर कॅपिटल झालाय आणि देशाची 65% डेटा सेंटर कॅपॅसिटी एकट्या महाराष्ट्रामध्ये तयार झाली आहे आणि याच्यामध्ये एआय ड्रिव्हन जी काही डेटा सेंटर्स आहेत याची सगळ्यात जास्त कॅपॅसिटी आज महाराष्ट्राकडे आहे.
Under Deputy CM Eknath Shinde's directions, the Urban Development Department has issued new enforceable rules and speed up Amrut 2 and Nagrotan infrastructure projects. Under new directives, any delay will hold contractors, consultants or officials directly accountable with disciplinary action if timelines slip. Extensions will be given only with recovery plans. The government will fast-track statutory clearances, appoint a new project consultant and require monthly reporting. Maharashtra has launched a nationwide first, a smart and intelligent village. CM Fadnavis inaugurated Satnavari in Nagpur district, setting the template for modern, tech-enabled rural transformation. The state now plans to replicate this particular model across 10 villages in every taluka, nearly 3,500 villages in the first phase. Now, backed by state funds and partnerships with tech enterprises, Maharashtra hopes these smart and intelligent villages will soon become role models across the country. From telemedicine and clean water to AI-driven classrooms, Satnavari offers a blueprint for how technology can transform rural India. With 18 services already functional, the project has improved farm economics, boosted healthcare access, and modernized education. In response to recent US tariff moves, Chief Minister Fadnavis chaired a high-level meeting on trade and export strategy. The approach is going to be clear, turning external pressure into opportunity by diversifying markets, building ease of doing business and accelerating reforms. A dedicated export war room will coordinate quick interventions, while measures include speeding clearances, creating land banks, promoting private industrial parks and ensuring industry stays protective and competitive. At the Shakti Samvad conclave, Chief Minister Fadnavis emphasized that achieving the Viksit Maharashtra 2047 vision is only possible through the active involvement of women in the state's growth journey.
आणि पुढच्या 20 वर्षांमध्ये भारत जगातली पहिली किंवा दुसरी सगळ्यात मोठी अर्थव्यवस्था बनणार आणि त्या संपूर्ण वाटचालीमध्ये तुमची सर्वांची भागीदारी ही अत्यंत महत्त्वाची असणार आहे.
As part of the push, schemes like Lakpati Didi have helped over 50 lakh women become financially independent, while the Ladki Bahin Yojana has supported 2.5 crore women with 1,500 rupees monthly stipend. Girls also receive free education from KG through PG, reinforcing gender equality and economic empowerment. Those were all the news updates we could pack for you in this week's Maharashtra 360. Until next week, take care.
Welcome back to ET Now. You're watching Buy Now Sell Now with me, Kanishka Sarkar and Ankita Saxena. A show we were taking all your stock-specific queries with our experts. So let's get back to the queries then. We still have Lancelot and Osho with us to answer all your queries. Now this one is a long-term query coming from RK Ahuja. He says, will you please guide me on a better buy for the long term? He suggested picks like Emami and NTPC. Lancelot, what would your suggestion be? Should he go for any of these two, Emami and NTPC, or any other stocks in that FMCG or power pack?
So, while if you look at the FMCG and power, I think both sectors will have good potential for the long term. But I think there are better choices in terms of valuations as well as business growth in that sector at the current valuation or current price levels. So I would look at in the FMCG space, I would definitely look at Hindustan Lever and Nestle as the two strong companies in this space. And maybe one could even look at Marico Industries because they have been premiumizing their products and looking at the health side, more actively. And that is generating them good amount of growth as well as improvement in margins. So these three options one can look at in the FMCG space. As far as power is concerned, I think the challenge is going to be from a distributor's perspective as well as from a power generator perspective. So I would, rather than NTPC, which is mainly in the power generation space, I would look at Tata Power, which is both in the generation as well as in the distribution space. And if you look at Tata Power, they are heavily into the renewable energy space, both in terms of generating power. Almost 1/3 of their power generation comes from the renewable energy space, and they are setting up a lot of charging stations as well as EV charging stations for retail distribution, and they will reach a lot of retail entities through this route, which will be provide much better profits going forward. So I would look at Tata Power as opposed to NTPC as a better option at this point in time.
So Tata Power instead of NTPC is Lancelot's pick. But let's move on to the next question then. Chandrasekharan is writing in from Chennai. He says, is it a good time to enter TCS or ITBs with current price for the long term? Osho, let me come to you. Is it a good time to enter? These counters have seen considerable correction. But for the long term, there's still macro headwinds for the IT pack. But what would you say? How does it look like on the charts? And is this the right time to enter?
See, overall, the whole IT pack has been very underperforming the whole market from a very longer period of time. And on the parameters front, there has been strongly oversold parameters that can be seen in the whole IT space. So I expect that from here onwards, majority of the IT counters are at a very strong support levels, and there is a high possibility for kind of a revival in these counters. So one can start looking for accumulating these counters like TCS, Infosys, all the heavyweights and even the mid-cap counters are looking quite positive at current levels, and one can try to start accumulating, but in a staggered manner. Don't go with a full capital at a single go, try to accumulate on any kind of dip towards the support levels. For majority of the counters, they are at a very strong support level. So one can look for buying opportunities. And I expect that in a medium to long-term perspective, there is a high possibility for revival in these counters. And even one can look for longer-term time frame perspective also for a decent returns in these counters.
View on the IT pack. The next question again is on the consumption pack. We already had Lancelot answer, what's the fundamentals looking like for FMCG space. But Osho, let me come to you, this viewer, Swati. She wants a slightly longer term view, but we already had Lancelot answer that. But how are the charts looking for Emami and Avenue Supermarts? She wants you to advise that.
See, firstly, for Avenue Supermart, I expect that there is a high possibility for the counter to retest the zone of 52 to 5400 in a short to medium term time frame. There has been very strong technical developments in DMart, and I expect that the recent breakout that has happened approximately around the zone of 4500 should augur well for any kind of profit booking in the future. So one should try to look for buying opportunity in DMart on the higher end 5200 followed by 5400 is the target that one can expect from medium term perspective. Now coming to Emami, again, Emami has not performed that well at current levels, and there is high possibility that it might remain under subdued or consolidation phase. So one should wait for a breakthrough in these counters approximately on technical levels. 620, 640 is a very strong resistance. Once it breaks through the resistance level, then only we can look for buying opportunity in Emami. Else, we can look for opportunities in Nestle India and Marico from short to medium term time frame.
All right, so that's the view coming in on Emami and other names. But let's move on to the next question. This is Manoj who's writing in from Mumbai. Lancelot, he wants to know about Blue Jet Healthcare. He's bought 300 shares at a buying price of 850. So clearly he's sitting at a loss. Lancelot, Blue Jet Healthcare, while it has given some solid returns in the last 1 year, last 6 months have not been that great for Blue Jet. It has been very, it hasn't seen much moves coming in. In fact, 10% downtick is what Blue Jet is seeing. What would be a long-term view on this counter? Would it be a hold? And what do you see for this counter?
See, while the healthcare space is likely to grow, what happens in this space is that it takes a while before a company can, get some kind of dominant position in the space. And Blue Jet being in, they are operating in the space of integrated, intermediate manufacturing and niche pharmaceutical intermediates. It will take a while for them to establish and to see margins improve over a period of time. So I think given the current valuations, it doesn't really justify immediately making an investment at this point in time. Maybe one should wait for any correction. And if there is significant correction from the current price levels, then one can look at adding it to your portfolio.
All right, so buy on dips call. But Osho, let me come to you for the next query. This is Professor Thomas George writing from Cochin. He's been holding 1,000 shares of Devyani International. His buying price is 150 rupees per share. He wants to know what should he do at this juncture. Do you think he should continue to hold? What are the charts suggesting?
See, overall, the counter has seen a very strong movement in the last 2 trading weeks from the zone of nearly 150 towards now 175. And is on the verge of giving a sloping trendline breakout. So one should wait for the breakout to happen. If it does, then the next potential target that can be seen on the charts is nearly 190 to 195. So that will be the level where one should try to partial book their profits from a short-term point of view. But from a medium-term point of view, even that levels look lucrative, and one can look for higher targets with trailing stop losses from a short to medium-term time frame. So I expect that recent move has given a kind of a reiterate the buying interest in the counter, and 195, 190 will be the next potential target that one can eye for.
Right, so that's the view on Devyani International. But let's move on to the next question. This is Dr. Zeenat Kausar who's writing in from Ranchi. She says she wants to invest in Castrol India for the short to medium term. Please guide what should be the entry levels. Osho, coming to you for the entry levels for Castrol India.
See, I think Castrol has been into a kind of a consolidation phase from the higher levels. It has also seen some kind of profit booking from the zone of 220, and now it is at a very strong consolidation phase, which has been near about the zone of 190 to 195. So wait for those levels to get tested. If it happens, then try to accumulate it in a staggered manner, because the technical views are still on a sideways, not very much bullish on the counter. So sideways to positive outlook is there. So wait for some further correction towards the zone of 190 to 195. And on the higher end, the resistance is around the zone of 220. So that will be the immediate range where one should try to book their profit. And even if it breaks through 220, then only we can see some kind of fresh momentum. But for now, 190 to 220 is the immediate trading range that one can look for buying on dip and sell on rise.
Those are the levels to track for Castrol India. But moving on to the next query then. This is Madan writing from Hyderabad. His query is on Equitas Small Finance Bank, of which he has 200 shares at a price of 70 rupees. And ITC, he has 200 shares at a price of 430 rupees. He wants a long-term view on it. Lancelot, let me come to you. What do you think are the fundamentals looking like for Equitas Small Finance Bank and ITC? Should the viewer continue to hold?
Yeah, my view is that small finance banks have a large exposure to the lower income, borrowers, and we have seen some stress in that segment. And since the concentration is mainly on the lower income space, with whatever pain we are seeing, that pain is not going to go away immediately. So I think there could be, when you look at the valuations of Equitas Small Finance Bank, it becomes very difficult to justify or see a great opportunity in the bank at this point in time. So it would be better advisable to shift to stronger banks, which could be like HDFC, ICICI, or State Bank of India, because they have much greater strength and ability to leverage their positions. As far as ITC is concerned, I think while the stock is doing reasonably well, and FMCG is going to grow, one can look at holding on to the stock, because while cigarettes still has higher duties, and I don't think the GST is going to be lowered as far as the cigarette is concerned. But on the other space, which is the FMCG space, I think they should see some amount of margin improvement as well as gain in terms of volumes. So that should be one can continue to hold or invest in ITC.
All right, with that, it's time for a quick breather on the show. Don't go anywhere. After the break, we continue to take your questions. Keep sending them in. Let's take a break. Welcome back. You're tuned into Buy Now Sell Now, where we are getting all your stock-specific questions answered. The number is flashing on top of your screen, so you can keep sending in your questions and we'll get them answered by our experts. Let's get back to answering your queries that you've been sending us. Now, this one's coming in from Paul, who's writing in from Cochin. She says she holds Cochin Shipyard at a buying price of 2,400 rupees. What should she do at this juncture? Should she hold on to it or should she sell? Now, clearly, all these defense counters have run up quite a bit, but she's not given the holding period. Actually, that should be of the essence, really. But Lancelot, at this juncture, what should she do with Cochin Shipyard? She's bought it at 2,400.
I think there was a lot of interest in these stocks, and that interest, coupled with lower liquidity in the market, really drove the prices up. And if you see, even at the current valuation, Cochin Shipyard trades at about 51 times earnings. And if you look at the earnings growth, while the orders may be growing, the delivery and execution does take couple of years for each order to get executed. And so we are seeing that profit growth is not that high as compared to the PE multiple. So given that, you can either look at exiting, or you need to wait for a significant correction, which may not happen in a hurry, before one can average out on this stock.
On Cochin Shipyard, but moving on, we have a query coming from the healthcare and pharma space. This one is on Fortis. The viewer Mohit, he's writing from Ludhiana. He says he has 350 shares of Fortis at a price of 270 rupees. His time horizon is 2 years. Please guide what he should do next. Lancelot, what about Fortis?
So I think that, as far as Fortis is concerned, also it has probably hit an all-time high, over the last so many years. And if you look at its valuations, it is trading at a very high multiple. At the same time, we expect that, the hospital growth and EBITDA will actually moderate over a period of time as, insurance companies as well as regulators start to look at practices as well as, the kind of profits the hospitals are making. And that should probably moderate the growth as far as the share price is concerned as well. So either it could be in a significant period of consolidation, or any negative news could see some kind of correction. So at this point in time, it's very difficult to buy. If you're holding the stock, then you can look at always booking profits at these levels.
The levels to watch out for, and that's the view coming in on Fortis. Moving on to the next question. This is Nikhil who's writing in from Noida. He says he has 1,000 shares of Oil India that he's bought at a buying price of 440 rupees. What's the near-term view? And at this current level, can he average in Osho? Oil India that he's bought at 440 is clearly sitting at a loss. Good time to average in, and what would be a short-term target for this?
See, again, on the technical front, the counter is hovering below its long-term and even the short-term moving averages. So there is a high possibility that this might continue in the short-term period. The next potential support for the counter is placed around the zone of 360. So that is the zone where one should try to accumulate the counter from a short to medium-term point of view. The overall trend remains sideways to negative until it surpasses the long-term moving average, which is currently placed around the zone of 420. So I expect that in the short-term period, any dip towards the zone of 360 can provide some kind of cushioning to the counter, while on the higher end, 400 will be a very strong resistance zone. So until we see a decisive breakthrough, it will be difficult for the counter to regain some kind of strength. But 360 should be a buying zone, and approximately 390 to 400 will be the profit booking zone for short-term trading.
All right, so that's the technical view on Oil India. Thank you, Osho, for that view. On that note, we'll let you go, and Lancelot as well. That's all the time we have today to take queries on Buy Now, Sell Now.